Hello and welcome to yet another episode of Asian Tigers. My guest on the show today is Shekhar Sambhshivan. He's a 25-year veteran investing in the Indian markets. He's from Invesco. Shekhar, thank you very much for joining in today. Pleasure seeing you.
Pleasure. Thank you for inviting.
How do you read markets now? We've had such a terrific start to the year. People complain about valuations. Markets are not stopping. Are you feeling a sense of vertigo, or do you think earnings will catch up, justifying the kind of levels that we are in now?
So take a step back and look at last 3 years. We had a lot of issues related to macro across the region, specifically in India also. Beginning of the year, earnings, whatever consensus have estimates, has to be tapered down meaningfully. Despite that, market have done well, in the hope that earnings story will continue to someday catch up. This year, I think things seems to be slightly better off, at least to begin with. We hope that at least the second half should start giving us higher than better earnings growth. So market somehow is pricing in a little bit of earnings growth from next 2 years from now. Hopefully it should now come in. That's the last cog missing in the whole story.
It's an important cog though.
Absolutely.
Because it's been missing for the last 2 years, and what you said could have been said 2 years back, that we hope earnings will catch up, and for 2 years they've been mildly disappointing.
Sure. But just take a step back again to understand, we basically look at indices earnings growth. So 2 or 3 sectors or companies have very clearly disappointed, and that's basically dragging the whole earnings story for major indices. Commodities, PSU banks specifically, and some amount of auto plays, which is basically more to do with currency and overseas related income. So if you take that out of the equation, look at the broader indices, we still have a decent amount of earnings growth. And sectorally, if you try to split it, I think the answer lies much more clear that we still have a decent earnings growth there.
I want to ask you specifically about banking, because that's the most important part of the market right now. What do you see happening first with the kind of NPA resolution that's been spoken about? How important is that in your book, and what to your mind would be an acceptable solution for this big problem?
So let me take the first point which you asked about, earnings for banking sector. Because the last 5 years, as we discussed, that economy hasn't done well. So obviously the leverage part of the economy will surely not do well. So banking sector by and large has suffered, and primarily because of 2 issues, lack of capital and NPA issues. If you look at the largest bank in the space, the earnings for the last 5 years by and large is constant, which is about 11,000 crores, right? But in the same space, we have at least 2 or 3 banks in the private sector, which has given 2 to 3 times income, or at least earnings, in the last 5 years. And they operate in the same geography, under the same policy makers and guidelines. So why it is so different? Banking to me is the simplest of the business. Just borrow from one place and lend it to and eat the margin in between. But despite we have such a huge dichotomy. So the key is, I think, efficient management of the banks, of the business. I think some banks have done it very clearly in the last couple of years. Coming to the second point about how serious is the NPA, I think that's quite a serious issue, and somehow we are just trying to push the can too much down the road. I hope we come up with some solution to get an answer to that, but answer is still clearly not very much evident.
What solution would displease you, and what would make you happy from a sustainable market perspective?
See, it's a bit difficult from a constraint in which the government is operating. I also had whatever commentaries available on public media. So right now we are talking about merging of large public sector banks to tide over this issue of NPA. But the problem remains, how are we going to capitalize these banks, even if you are gaining some synergies out of that. Another thing, how we look at it is simply like that 70% of the market share of the banking in terms of advances is the public sector banks, and 30% is the balance private banks. But if you look at the profitability, it's the other way around, and nowhere across the globe these type of dichotomy exist. So to me, I think the market share loss from public sector banks will continue, and private sector banks will continue to gain market share in the next couple of years also.
Do you worry that the spate of weak credit growth numbers that we're seeing for the last few months for the market, for the banking system as the whole, is not maybe just a public sector problem, that eventually it might actually start to drain back some of the private sector credit growth as well?
Yes and no. But this 3-4% is actually not the actual number also. You need to take with a pinch of salt. The actual number is somewhere 8 to 9% or maybe
still not great.
Yeah, that's correct. So he has still come down from 17-18%, which was much higher number a couple of years back. Retail banks are doing quite well. Corporate credit is surely weak, and that's why it is taking the whole heavyweight down. But if you look at a couple of banks which have modeled quite well in the last couple of years, managing their portfolio in corporate as well as retail space quite well, I don't get the sense it would be a problem for them to grow.
What about NBFCs? I know that you own some of these NBFC companies in India in your portfolios like Bajaj Finance, etc. And post demonetization, there's been a huge derating in some of these microfinance kind of spaces. Do you see any valuation issues out there or growth issues out there, or are you confident that this is a space which can grow at the pace of private sector banks from a market perspective?
We surely sense it should, purely because of underpenetration of consumers finance per se across various categories, and not many efficient players are there. A couple of them have done quite well. A couple of models have evolved in the last decade or so but haven't done so well. So we feel that going forward, if banking sector does well, B2C financing, which we are likely to see much better results, plus penetration will improve. A couple of good models will evolve in this space.
There seems to be a lot of money which is coming into financial savings right now, and investors are betting on various themes, some like insurance, some like brokerages, some like housing finance. What do you think would come out on top from this heap, or from this translation into financial savings from the great Indian public?
So private sector banks should benefit who have a decent model focusing on this part of the economy. There would be surely some companies do well in the consumer finance space. And in the housing finance, which has been lagging a little bit, now we are getting some amount of sense that affordable housing finance should do well. But it's still early days for that. I think these 3 or 4 spaces we are much more confident. Others, I think, wait for some more time to evolve more efficient models there.
Okay. You are not a pure India investor. You invest in other markets as well. How does India stack up, given its earnings growth and given its valuations, in relation to some of the other markets that you invest in?
So if you look at purely from a valuation yardsticks, India surely looks somewhere up there in the top quartile. But I think the whole thing is to look from a holistic point of view in a comprehensive way, from an earnings sustainability point of view. And there are, surely good models coming up in India in various spaces, which give us a little bit more comfort that these markets have strong legs to walk in the time to come.